This video is created by Jagrat Creation. It is on joint venture accounts where no separate set of books are maintained. Now I want to solve one sum wherein no separate books of accounts for joint venture transactions are recorded. Just observe the sum on the screen. This is the sum that I want to take care of. Timir and Yogesh entered into a joint venture to consign jute to foreign country. Timir sent goods worth 12,50,000 and paid freight of 10,000 and 9,250 Sunday expenses. Yogesh sent goods up to 25,000 and paid freight and insurance 8,400, dock charges 2,250, excise 3,265 and 4,375 as sundry expenses. Yogesh received the account sale and to be 6,25,000 on the sales price of all goods. Prepare necessary accounts in the books of Timir and Yogesh. Now see, no separate books of accounts are maintained. Timir records all these transactions in his books of accounts. Yogesh also records all these transactions in his books of accounts. And when Timir records all the transactions in his books of accounts, he prepares joint venture account and Yogesh account. When Yogesh records all the transactions of joint venture in his books of accounts, he prepares joint venture account and Timir account. So, first of all, I will record transactions in the books of Timir. Then I will record the transaction in the books of Yogesh. Same transactions are going to be recorded. Then I will demonstrate the comparison between recording by two parters in my last part of the sum. That's an important point that I wanted to explain. Now let me start. So this is the details of the sum. Books of Timir. He prepares joint venture account and Yogesh account. Now Timir is one of the partners. He records all joint venture transactions in his personal books of accounts. No separate books of accounts for joint venture business are being maintained. So Timir records all the transactions in his personal books of accounts. Now the first transaction, Timir sent goods up to 50,000 for joint venture business. I am Timir. I give goods for joint venture business. It amounts to purchase for joint venture business. And when it is a purchase for joint venture business, joint venture account is to be debited. I give goods to the joint venture business. From personal point of view, it's a sales. So sales account is to be credited. So the journal entry for the first transaction, joint venture account debit to sales account. And these are the expenses paid by me. When I pay expenses, I give cash. Cash goes out of my pocket, so cash account is to be credited. It is an expense of joint venture business, so joint venture account is to be debited for that. So joint venture account debit to cash account. So these are the expenses paid by me for joint venture business. Expense of joint venture business are to be debited to joint venture account. Now Yogesh has sent the goods up to 25,000. Yogesh is the giver. Credit the giver. This is a purchase for our common business. So it's a purchase for joint venture business. So joint venture account is to be debited. So joint venture account debit to Yogesh account credit. Now he has paid these expenses: freight, insurance, dock charges, excise and sundry expenses. These are the expenses paid. All these expenses are the expense of joint venture business. These expenses are not going to be debited to personal expense account, but they are going to be debited to joint venture account because it's a short-term partnership for which we want to find out the profit immediately. So, and these expenses are not my personal expenses, so it could be debited in my personal books of accounts as an expense. It is a joint venture expenses, and when it is a joint venture common partnership expenses, it should be debited to joint venture account. So joint venture account debit to Yogesh account because Yogesh is the giver. Joint venture to Yogesh, joint venture to Yogesh. Joint venture to Yogesh. So if the expenses are paid by Yogesh, then Yogesh is the giver of cash. So Yogesh account is to be credited. But if I pay, being Timir, if I pay expenses, I have to credit cash account. Notice it. Now Yogesh has received 6,25,000. Yogesh is the receiver of 6,25,000 rupees, the sales revenue of joint venture business. Yogesh is the receiver, debit the receiver. So Yogesh account debit, it is a revenue, income, gain of joint venture business. So joint venture account is to be credited. So I am Timir, this is a sales. My personal sale? No. As it is not my personal sale, I cannot credit to sales account. It is the sales of joint venture business, so it should be credited to joint venture account. So now all these transactions are recorded. Now let us find out the profit. Total of credit minus total of debit, we will get the profit. That profit will be distributed. Nothing. You are not told anything. So it is distributed equally between the partners. My profit, I am Timir. My profit will be credited to my profit and loss account. And the profit of Yogesh will be transferred to the Yogesh account. So joint venture account debit to profit and loss account to Yogesh account credit. Now the settlement is to be made. Yogesh has received 6,25,000. He has given this value to the joint venture business. Difference is he has to pay to Timir. I am Timir, I receive. I will receive from Yogesh 3,25,480. If I receive them, I will write bank account debit to Yogesh account. But suppose if the amount is not received but will be received in future, then I will just strike the closing balance amount recoverable from Yogesh. I am Timir. I have got a right to receive money from Yogesh 3,25,480. Now I want to record the same transaction in the books of Yogesh. So Timir has given the goods of 2,25,000. In the books of Yogesh, two accounts are prepared. Joint venture account and Timir account. Now goods are given by Timir. Timir is the giver. It is a purchase for joint venture business. Joint venture account is to be debited. So joint venture account debit to Timir account credit. Expense is paid by Timir. Timir is the giver. Credit the giver. So joint venture account debit to Timir account credit. Similarly, joint venture account debit to Timir account credit. These are the expenses of joint venture business. So joint venture account is to be debited for the expenses paid for joint venture. And who has paid these expenses? Timir has paid the expenses, not me. I am Yogesh. I have not paid the expenses. Timir, my partner, has paid the expenses. Is the giver. So credit the giver. So Timir account is to be credited. Now I am Yogesh. Goods given for joint venture business 2,25,000 by me. So in my personal capacity, it is a sales. For joint venture business, it's a purchase. It is a purchase of joint venture business, so joint venture account is to be debited. I am Yogesh. In my personal capacity, it is a sales. So sales account will be credited. So joint venture account debit to sales account. Now these are the expenses paid by me. When I pay the expenses, cash goes out of my pocket. Cash account is to be credited. These are the expenses, not my personal business expenses. They are the expenses of the joint venture business. And joint venture business expenses should be debited to joint venture account. So joint venture account debit to cash account freight. Joint venture account debit to cash account dock charges. Joint venture account debit to cash account excise. Joint venture to cash sundry expenses. So these are the expenses paid. Cash account is to be credited for that. Now I am Yogesh. I have received 6,25,000 by selling the good, by sale of goods of joint venture business. 6,25,000 is received by me. So I got that money, cash or bank account debit. It is an income of joint venture business. So joint venture account is to be credited. This sales is not my personal sales. Had it been my personal sales, I would have credited to sales account. But this is a sales of joint venture business. So it will be credited to joint venture account. So cash or bank account debit to joint venture account credit. Now I find out the profit. The profit will be distributed equally amongst partners. My profit I will be crediting to profit and loss account, and Timir profit will be given to Timir's account. So Timir account is to be credited with 56,230. Now everything is done. How much amount I am obliged to pay to Timir? So 2,69,250 plus 56,230. This is the amount I am supposed to pay to Timir. So it is considered as a closing balance. It is my liability. I am Yogesh. I am obliged to pay Timir. So it's my liability. It is a credit balance. So closing credit balance is 3,25,480. Now for this sum, I have prepared joint venture account in the books of Timir, as well as I have prepared joint venture account in the books of Yogesh. Now I want to compare both this joint venture account just to make concepts clear. Just observe. So this is the joint venture account in the books of Timir that I already explained to you. Now this is the joint venture account in the books of Yogesh. This is the joint venture account in the books of Timir. This is the joint venture account in the books of Yogesh. Now I want to compare debit with debit. So let me keep debit side because of the limitations of the screen. Just observe what I do. So this debit will be compared with this debit. Now see, this 2,50,000, 2,50,000, 10,000, 9250, 10,000, 9250. Numbers tell you. 2,25,000, 2,25,000. 8,400, all these four expenses are recorded here. Just observe the number. This is the profit distribution. Now whatever the difference is, that difference is in particulars. Now see, just observe. What Timir says as sales. Timir says this 2,50,000 goods given to joint venture is a sales for Timir. For that, Yogesh, for the Yogesh, Timir is a giver. So here sales account changes to Timir account. So what Timir says as in his personal capacity is sales. For the same transaction, Yogesh says that Timir is the giver. So Timir account is to be recorded in narration once again. 10,000. The expenses for joint venture paid by Timir. So Timir says that I have paid cash. Yogesh says that Timir is the giver. So cash changes to Timir. Similarly, 9250. Timir says that I have paid cash to joint venture business. Yogesh says that Timir is the giver. Now 2,25,000. Goods are given by Yogesh. So Timir says that Yogesh is giver. Yogesh says that it is my personal sales. Similarly, all these expenses are paid by Yogesh. Yogesh is the giver from the viewpoint of Timir. Yogesh says that I have paid cash to the joint venture business. So, Yogesh account is changed to cash account. Same is the case with all the expenses. This is how comparison is being made. Now, for this sum, now compare the credit account. See, goods are sold by Yogesh. So Timir says that Yogesh is the receiver of funds of the joint venture business. While Yogesh says that I have received cash. So this Yogesh account is changed to cash account in the books of Yogesh. So this is how comparison is explained to you. Now, I have tried to record all the joint venture transactions in the books of both the partners by preparing joint venture account in the respective books and the other co-venture accounts, other co-ventures account, other partners account in the books of the partner. I have tried to explain to you all these things. I feel that you have followed all these things. Thanks to you.